Hello, good morning, good afternoon, and good evening. My name is Bilal, and I'm covering today for Miss Shazia. She's busy somewhere doing trade, might be, and making some money. So we are here, and I'm gonna not waste any time. And Mr. Krishak is here, one of the best person that you can learn some trading and learn how to make money and be rich and live your dream life. So the stage is yours, Mr. Krishak.
Thank you so much, Bilal. I appreciate everyone being on the call. Again, these sessions are really, really valuable in terms of learning how to trade, not just learn how to trade, but also understand the markets and talk in terms of psychology. The session that we are going to focus more on today is going to be more on psychology because a lot of people know what technical is, a lot of people know what fundamental is. But what they usually lack is from a mindset perspective because they forget how would their mind process when they place a position, right? When they place a trade, because they're so much focused on the outcome and not process driven. And this is what we're going to focus more on is learning how to be process driven. So I'm going to quickly go ahead and share my screen, and that way we could look at psychology. Okay, there we go. Okay. Let's talk about psychology. I know there are a few traders on the call. I would like to first ask their opinion, Mr. Maher, Saeed. I would like to ask your opinion. What exactly is psychology, and how would you like to how do you usually look at psychology in terms of trading? And that can also be in personal life as well. That's fine.
Absolutely. Thank you. And I'll go ahead and take the call first. I appreciate you being on here. So, psychology is a key characteristic and part of trading. So, yes, we have the fundamental analysis and technical analysis, but psychology for me is key. And the reason is we know the statistics, and the statistics don't lie because they're generated from history. And we know that the majority of people in the industry, in the forex industry, lose money predominantly within the first 30 days or 60, 90 days. And I believe most of it has not to do with lack of training or knowledge, but it has to do from emotion. And psychology plays a big role in trading because it's an emotional roller coaster. When you're making the money, you can be too quick to close a position. When you're losing money, you can hold on and take a bigger loss than what you should have. So what I do, Krishak, is I meditate, I take some deep breaths, I relax because Forex trading is not for the people who suffer from high blood pressure or weak of heart. It's definitely a adrenaline rush, and if you don't maintain your composure, your emotion, then you're in for a disaster. So, Saeed, if you'd like to add anything to that, floor is all yours. I guess not. Okay, so I think I might have spoken for him on this call as well. What do you think about what I had to say, Krishak? What's your continued education and knowledge? Oh,
Sayed,
I
Ratan.
can
I'm sorry. Sayed was trying to say he said he don't have a mic, but your mic is mute, Mr. Sayed. If you unmute yourself, then we will be able to hear you.
Okay, I think he needs to get a
Yeah.
mic.
Could you guys
Up
hear
until
me?
he gets a mic, I can
Yeah,
take
we
over.
can
That's
hear you
fine.
now. We can
Okay,
hear you
okay,
now.
we can hear
All
you.
right. I thought I did not have a mic. So I've written about today's trade that I've taken. I was in a trade for 7 hours, and it's either TP or an XL when I'm in a trade. It has taken me years to develop this psychology. I used to cut my profits early. I used to hold my losers until my SLs got hit. So it has taken me years to learn about this thing and have a patience. And once you have patience, you are only gonna see the rewards afterwards. You have a patience. You have patience. If you are not patient, guy, the I feel like trading is not meant for you.
Completely agree. Completely agree. Patience is a big fundamental role of the trading process, and in Arabic we call it, and in Islam we call it sabr. Sabr is
Correct.
is an amazing characteristics for every human to have. And like you said, Krishak, is not only in forex but in the personal life and in your entrepreneurship and as a leader. Definitely, patience is a good part of the psychology. We'll go ahead and let you continue, Krishak.
I completely agree, Mr. Maher and Saeed as well. You are absolutely correct because when you learn to hold your winners and cut your losses short, that is when you see progress in trading. And psychology is more of just being disciplined in any part of your life. It's not just trading, as what Mr. Maher said, and it's just a general perspective of life. And let's actually understand how psychology can impact in terms of trading. Is that a lot of people, 90% of the people, now I always go by this rule, 90 90 90, 90 90 90, meaning 90% of the people lose 90% of their money or 90% of their capital in the first 90 days. This is what I generally go by, that 90% of the people lose 90% of the capital in the first 90 days. And the reason behind this is not sorry, it's not trading, it's not fundamental, it's not fundamentals or technicals. It's more psychology. Because I'm a believer that any strategy works. Any strategy works. If the strategy is aligned with your psychology, you will excel in trading. If your psychology is not aligned to your strategy and vice versa, then there will be a conflict in trading, and the output will not be as good as what you would be expecting. So trading, technicals, fundamentals, and psychology, these are the three main pillars of trading. And today's important pillar is going to be psychology, as mentioned earlier. So, how do I look at psychology now? I have been trading for the past 7 to 8 years full time, and how do I usually look at psychology? Is my first and foremost thing is take 1 to 2 trades a day. Just take 1 to 2 trades a day, not more than that, right? And the second thing is capital, 2 to 3% risk per trade. When you limit your losses, you could see the outcome, because when you keep your losses small, when you're able to just risk maybe 2 to 3%, that's your risk, right? Whereas your profit should be, let's say, 5 to 6%. Let's say if you take even 4 to 5%, 5 to 6% as your profit target, as what Said said, he will wait for his stop loss or take profit to be hit, which is a really good thing. But I would like to add on this as well, that it's good to manage your positions, right? Meaning it's good to keep a track of it. Yes, you could hold your position, you can hold your trade for the next 7 hours. It's fine. You could hold your position for the next 10 hours as well. It's okay. But what I would like to add in this is that actively you'll have to actively manage the position. Meaning, what if the news comes out in that 7 hours of your position, where you are in a position? What if a fundamental news comes out? What if interest rates come out? What if PCE data comes out? The market then go the other way. So it's always good to, now what I would do if I'm holding a trade for so long, psychologically, I would be very much attached to the outcome, that, hey, I need a good outcome because I'm in this for 7 hours, right? Everybody's outcome focused. We all are outcome focused, right? And that's okay, because that's how our mind is trained from the beginning. So we sometimes have to change it. The change would be in trading is to start taking partial positions, meaning if you're in for one lot, start taking partials. Take 50% of your profit, take 60% of your profit, bring your stop loss to break even, meaning if your stop loss is up high there or down below, bring it to your entry. When you bring your stop loss to where you have entered, your trade is risk free, right? Now your mindset is in a good state that, okay, you have nothing to lose. Number one, you have made money. You have made 60% of your whatever, how much ever lot size you have entered. Let's say somebody entered one lot, right? Um, so now you have technically taken 60% of your profits. So you have booked 60% of your profits and you're letting your 40% of your profit or trade run. And then you can bring your stop loss to no profit, no loss, which is at the entry. That way, you have nothing to lose in the market. You have nothing to lose, and that keeps your psychology even more on track. That you are much more confident in taking positions now. And this is what I always go by: is take 1 to 2 trades a day, 2 to 3% risk. You don't need to risk more, right? And if you feel that you sometimes, especially I trade the New York session. I trade the New York session from 8 a.m. Eastern up until 11 a.m. Eastern or 12 p.m. as well, Eastern. I feel that the move has happened overnight for me. I feel that no, everything's happened overnight. Asian markets were good, European markets were good. I was asleep by then. Now, my mind would say impulsively that I need to jump in whatever I see. No, let the markets come to you because the markets are going to be here tomorrow. The markets will be here day after. The markets will also be here after a month, after a year, after a year or 5 years as well. What may not be there is your trading capital if you try to force something. At that, and that brings into my next point is FOMO, fear of missing out. It's okay if you miss out on opportunities. It's okay. It's fine. Opportunity will come back to you. Trading is one, or finance is one industry that I would say is you have endless opportunity. You have n number of opportunity. Up until you have a trading capital, you have n number of opportunity. The moment your trading capital goes away, you will not be able to place position. You will not be able to place a trade because you don't have a capital to trade with. It's okay to miss out on opportunities, especially in trading, because you will have an opportunity tomorrow. You'll have another opportunity day after. So don't force an opportunity. Let the opportunity come to you. Let the markets come to you. Because the moment you start forcing, that will put you into another loophole is over trading. You see how everything's interconnected? From fear of missing out, you missed out on a position. Now you're over trading. Hey, I need to jump back in. I need to jump back in. You'll make a loss. I need to jump back in. I want to recover. That will put you into over trading scenario. Now you're trading a lot more than you should be, right? Whereas if you take a loss, you should be down to 2 to 3%. You are not down 10%. You're down 7%. You're down 10% of your entire account, right? This is why it's important to not force anything in trading and never trade on bank holidays. We all know that the markets are 24 hours, 5 days a week. If there is a US bank holiday, the volume is going to be the lowest. There will be the lowest volume. Make sure that even if you trade London markets, it's okay if you trade London markets. If it's okay if you trade the Asian markets because the Americans are asleep by then. But the moment you jump into the New York session, which is 8 in the morning Eastern, do not trade the New York markets because there's a bank holiday. When there is a bank holiday, there will not be a lot of volume. There will be abrupt movements up and down. That will even put you into a rabbit hole. I call it that. You now have to, again, make back whatever you lost on a bank holiday, right? Bank holiday is when banks are shut. There is no enough liquidity. There's no enough volatility. So rather take your day off as well, right? Learn something on the side. Read a book. Review your positions. Review your trades, right? But do not trade because, as I mentioned, if there's a bank holiday, tomorrow is another opportunity for you to make money, irrespective, right? So this is what psychology is. Again, there's a lot more to psychology, but psychology is more of trying to figure out your own personal way of trading, because trading is a journey for each and every one of us. Um, Technically, fundamentally, we all can be on the same page, but psychologically, we will be on a very, very, very different tangent. We are all on a very different tangent psychologically because our mind performs in a very different way. Any questions, folks? Does anybody would like to add something? I see a chat. I became profitable when I started taking only one trade a day. And how did that work for you, Said? When you just take one or two trades a day, right? How did that work for you in terms of your mental game, in terms of your mental health, right? Whereas where you were taking five trades a day, seven trades a day, now you're just taking one trade a day and you're holding it for 7 hours. How does that impact? How does it have an impact on your mind?
So I have a belief that if you are not getting your trades right in a day, you are, no matter how much trades you take in that day, you are not going to make profit on that. So to keep this scenario out of my way, I chose to only take one trade a day, and that drastically improved my profitability in this case. You know, before this situation, I used to take 3 to 4 trades a day, very high probability trades. But the market is never on your side. You know, it's a game of probabilities. So I started taking heavy lot sizes according to my account size. But I only take only one trade a day. I used to I used to have a lower volume, but I used to trade frequently. And once you take 3 or 4 trades a day, you have higher chances of matching out on your account size. You have to manage your account every day, as you have already mentioned that you have to manage your trades. Just don't have to get into a position and then start your spin and go for a walk. Sometimes you have to manage your positions. You have to book your partials and let small quantity of your trade go on. Maybe that small quantity of your running position can make you a bigger profits. That's another thing that I've learned over time. So it's a kind of trader I am. I am more comfortable with taking only one trade, managing that only one trade, rather than taking four or five. I figured this out years after years. I used to take 4 or 5 trades, as I've already mentioned, for 3 years. I have been trading for 3 to 4 years only. And I've only been profitable when I started taking only one trade a day. So this was a game changer.
That's good. I appreciate your answer. Again, in short, I always say quality over quantity. Focus on the quality. Because quality matters, right? Quality really matters in this is again, quality matters in life, right? When you look at quality, you would be very, very happy with the quality that you have, especially even in trading. You just take one position a day, as it said, but if that trade is A plus 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 setup, which has a high probability of winning, you would be way happy just placing one position, because you don't have to manage multiple positions now. You just have to manage one position, one trade a day, two trades a day. That's it. You're done for the day. In trading, less is more. The less you trade, the more you get. That is trading. But whereas it's trading is more about, working smart actually. This is what I call it. Finding the opportunity and letting the opportunity come to you. So trading is all about how smart are you when it comes to markets, right? How quickly are you able to identify the opportunities when it comes to the markets, and how quickly are you able to identify when to stay away from the markets? These are the two things in trading. Identify when to jump in, and identify when to step out, or just stay out of the market, especially during bank holidays when the markets are moving sideways, for example. I am not trading for the entire day. The reason why I'm not trading today is because the markets are moving sideways. If I open gold, XAU, USD, again, I know we are going back onto the term in looking at the charts. But if you look at the charts right now, I'm on the half an hour time frame. If you look at the chart right now, this is a level of support. This is a beautiful level of support at the bottom, and this is a level of resistance at the top, right? All I can see right now when I mark my support and resistance is that I see that the markets right now, I'm just trying to get my tool, is moving sideways like this. If I follow the direction of the market, this is what is currently happening. It is moving sideways, meaning there is no direction as of yet. So it's always good to identify when to stay away and when to jump back in the markets. When you mark support and resistance, and again, I'll go back to my previous point, is that your technicals and psychology should be aligned. If my technicals say that the markets are moving sideways, psychologically it should be aligned as well that I'm going to stay away from the markets. And this is what I did the entire day. Did I make money? No. Did I lose anything? No. What did I do here? I preserved my capital. And that's the key to trading, to successful trading, I would say, is preserving your capital. Always preserve your capital. Capital is one thing that will help you place positions. Capital is the only thing that will help you make money. If you do not preserve your capital, you will not be here in the markets tomorrow. As simple as that. Capital preservation is the key. Follow the direction of the market, follow the trend. Don't look for counter trend positions. If the trend is going down, for example, gold is going down, only look for short selling, only sell. If gold is going up, only look for buying. Buy low, sell high, buy low, sell high. Whereas you take one position, you take two positions. That brings me to the next point is risk to reward, right? That brings me to the next point is risk to reward, meaning your risk, if your risk is $100 per position, your reward should be at least double your risk, right? Your reward should be at least double your risk. And that brings me to the other point is the game of probabilities as what Said said, that this is all about probabilities. Even if you win 50% of the time, with a risk to reward of 1 to 2, which is risk 100, reward 200, you're still making money at the end of the day. If your risk is 1 to 1, your win rate is 50%, you're break even. You will not make money because we have to pay the brokerage fee as well, right? Make sure that your your risk to reward is at least 1 to 2. That means for every 100, your reward should be 200, or probably let's say 170, 180, but it should be at least more than 1 to 1.5 to be in a good profitability bracket. So that way in long run you will be able to make money. Anything else anybody would like to add, folks? Feel free.
Thank you. No, I like what you're saying, and I completely agree with you. I think if we want to go back on talking about the fear of, the fear of loss we were talking about, I just want to touch base on that and give you some examples. And exiting winning trades too early is a perfect example of that. Hesitating to enter a valid setup after a previous loss, or moving stop loss. This is a big one. Moving your stop loss because you hope that the trade comes back. That is a really big one that I hear a lot in the market. Is like it's going down and you move it so it doesn't close, thinking that it's going to come back down. It just keeps diving and you lose your capital. And then as far as the greed is concerned, because we're talking about emotion, ignoring the take profit because you think it's going to continue to go higher, so it can work on the opposite direction. And another one is revenge trading after a loss. It's like you take a loss and you're so upset with yourself that you took that loss that you come back with a revenge. It's okay, now I'm going to do it. That is the absolute worst time to enter a trade because you're already, you took that loss. You need to calm down. And professional traders spend more time waiting than trading. Is that true or not?
That
Professional
is
traders
100%
spend more
correct.
times waiting than trading. So sometimes the highest paying trade is one you never enter. So this, we're talking, this is like a mindset for me, so I'm talking, I take it from a mindset point of view. So, I have a quote that if you don't master your inner voice, it'll master you. But I just came up with one right now. Before you can master the market, you must master yourself.
Brilliant. I'm gonna write that down. That is one of the best quotes I've heard, 100%, because you really need to master your mind. You actually really need to master your mind before you master trading, because
Yeah.
trading is all about it's a business after all. It's a business, and every
Yeah.
loss that I have encountered personally, I take it as a business expense. It's an expense of the business because no business can be 100% profitable all the time. We as business owners have to take losses as a part of our business, or we have to accept the loss, because losses are inevitable in any business that we look at. And trading for me is a business, because this is what I do full time. Trading for me is a business, right? Again, I'm still a student to the market. When I say that I have been trading for the past 7 to 8 years, that does not mean I have mastered markets. Even one of the best traders in the world right now, they are learning as well. They're still learning. Nobody has ever said, hey, I have mastered the entire market. I know what works, I know what does not work. Everything works in the markets, I feel. If you know fundamentally, technically, psychologically, everything works. Right. And I still feel that I'm still a student of the market, and we all are student of the market, because we can never outperform the market. We can never outperform the market, right? Market is here. Market actually is not here because of us, in fact, right? We are technically making money or losing money because of the market, right? So chasing the market and saying, hey, no, it's a bad market. No, I don't like how the price is performing. The markets do not care what you're looking at. The market will not care if you're looking for a buy, if you're looking for a sell, if you're looking for this support, if you're looking for this resistance. Market will say, I'm going to do whatever I want to do. You decide whether what you want to do. You want to stay away, stay away. You want to stay in, come in and join, right? But I am going to do what I'm going to do. This is what the market says. And that brings us to one of the biggest pointers. What Sir said is fear of missing out, jumping back into positions, moving your stop losses. That is one of the biggest red flag in trading, is moving your stop losses down, thinking that it will never hit your stop loss. Remember one thing, we are trading on leverage. We are not trading just on our capital. We are trading on leverage. When we have leverage, our stop losses get triggered early. Our stop losses get triggered early because our capital, we have limited capital to trade with. When we use leverage, we are leveraging the broker's capital. When we leverage something, we are more prone to we are prone to higher risk, I would say, not more losses, but higher risk, because we are using leverage. Again, that is going to be for the next session, because leverage is something that I want to touch base in the next session as well, to help you understand how to take advantage of the leverage and not to misuse it. A lot of people just misuse it, thinking that I'm going to turn my $5,000 to $50,000 using leverage, and that is not how it works. That is misusing leverage, because if you go full on with leverage, you max out on leverage. If the trade does not go in your favor, you will lose that 5,000 within minutes. Within minutes, you'll see 5,000 go to zero. This is what I want to talk about as well in the next session, to help you understand how to take advantage of the leverage. Uh, any other questions, folks, in terms of psychology? Again, as mentioned, psychology is more of it's you versus your mind, right? It's you have to understand, you have to bring the mind into your favor and say that, okay, I'm not going to do this. I need to do this. I don't need to do this. And when I say I need to do this, I don't need to do this, that is completely aligned. It should be aligned with your technical and fundamental analysis. This is what I mean, right? Meaning, do what you feel that needs to be done in the market. That means follow the process. Don't be worried about the outcome. Outcome will eventually happen. Outcome will eventually happen. You make good decisions, bad decisions, outcome will eventually happen. But increasing your stop loss, and one of the most important thing as well, would take profit. The market will never keep going up, as what Sir said. We have to book our profits. When we book our profits is when we move on to the next trade as well, right? So that being said, if also one more thing, one last thing, journaling. Make sure you journal your trades. When you journal your trades, journaling is very important, because when you journal your trades, you get to understand a lot about your trading style. create a column for emotions. Create one separate column as to what were your emotions when you were trading. Did you place this position because you had a fear of missing out, or you were happy, you were sad, you just wanted to be in the markets, but there was no need to be in the markets? When you create a list of emotions, when you place a because every position, every trade that you place has a reason behind it, and there should be a reason. It should be a positive reason. There should be a valid reason. Make sure that it is always a valid reason rather than focusing on, hey, the markets are moving, so I jumped in. No. Was it your setup? Did you wait for the markets to come, break out, do a retest, and then go back, go in the same position? Or did you just jump in because you were looking at a few reds and greens? That being said, this is going to be your homework up until we meet next time. Any questions, folks? Any comment? Anybody can any comment? I see there's a chat. I'm just going to take a chat. Thank you, sir, for bringing that quote. It is a really good one.
Thank you, Krishak, as always. I think if no one has any comments, we'll go ahead and wrap up today's session. Um, and let me just spotlight you for everybody. Oh, you gotta shut down your sharing so we
Sure,
can close
I'll
the
start
call.
by sharing. Yep,
There
there
we
we
go. All righty. So, again, thank you for being on the call and for your amazing lessons that you give us week after week. We've learned so much from you, Krishak, over the years. And for those that are on this call, please invite your friends, your family, anyone that wants to be on this call. It's a valuable, invaluable lesson. It's free. It's only 30 minutes, and every week we talk about a new topic. And so I invite you guys to join. These sessions are recorded, but it's nice to have you guys live and interacting during these sessions. So today was very nice. It was a mindset session as well, because that's what
Thank you.
psychology is about. It's about mindset. So thank you for what you taught us, and thank you for everyone on this call.
Thank you so much, sir. I
All right.
appreciate it. Thank you, everyone. See you.
Bye bye. Bilal, you can end the call.